Hey guys, David Robinson here. Welcome to the Lead Sponsored Podcast. I am really excited about our episode today. I have Phil Capron with me, and Phil is former military, and he got into the real estate space using his VA loan, no money down, and bought a four-bedroom house. And he talks about how that sort of opened his mind to the power of real estate because he bought this four-bedroom house and then ended up renting it out to his friends in the military, and it opened his eyes to what the possibility might be in real estate. And so he started to pursue a path. He talks about how he went and got his real estate license to get in the space, and then transitioned to fix and flip, and how he bought his first small commercial multifamily property. And we go into some depth about him setting up a specialized fund focused on military. And this is a Reg A fund, Reg A plus fund, that allows members of the military, veterans, to invest a minimum of $5,000 into his fund. And he talks about some of the challenges that he has faced and is facing in setting up that fund that I think would be very, very valuable to you. And then we talk about his business in acquiring over 500 units and multiple deals, 500 units in a small scale commercial multifamily space, ranging from roughly 13 units up to his largest 108 units, but a bunch of 20 unit, 24 units, 82 units, all in there, 500 units total. So I think our interview with Phil Capron will be very beneficial to your businesses, and I hope you enjoy the show. So let's go ahead and dive right in. All right, Phil. Well, welcome to the Lead Sponsor Podcast. Excited to have you on the show with us today. To get us started, would love to just hear a little bit about your backstory. What did you do before you got into real estate, and how did you get involved in real estate?
Hey, David, thanks so much for having me. It's a dangerous question. So it's a question of how far back you want to go.
Well, let's take it back to just before. We're going to find out about this, but your military. So maybe talk to us a little bit about
Yeah,
your military experience and then sort of your transition into the space.
sure. So I joined the military in 2008 because at 24 years old, I frankly just wasn't prepared to sit behind a desk. And the idea of, jumping out of plane, shooting big guns, going fast, being sneaky, that sounded really appealing. So I tried out for a job in naval special warfare. It's called Naval Special Warfare Combatant Craft Crewman, or SWCC. It's definitely a mouthful. Nobody knows who we are, and that's fine. We sort of liked it that way. But long story shorter, we take Navy SEALs and other Special Operations Command personnel to their maritime missions and serve as a insert extract platform, anywhere that's got a maritime component, and then have a mission set of our own, and like surveillance and direct action and reconnaissance and all that good stuff. So it was definitely a cool way to spend a few years. So I went through boot camp, I went through advanced training out in California. Then when I landed into Virginia to my first duty station, my first team, I instinctually always kind of understood that there was something to real estate and had like a vague interest. But at 24, I had no ability to buy a home as a ocean lifeguard or a touring punk rock drummer, which is what I did before joining the military. So not a whole lot of money for down payments and income verification and all that. So now with this wonderful thing called the VA, or Veterans Administration loan, I actually had the ability to buy a primary residence with zero money down. So what I did is I found a four-bedroom house that was across the street from the beach and about 5 minutes into base. And I moved three of my buddies in. My mortgage payment was, I guess, $1,350. And I rented the in-law suite for $800 and the third and fourth bedrooms for $600 each. So accidentally, I house hacked and was living for free. And so I was high on the hog, and I started reading books, The Purple Book, others. And, as I came to the conclusion of my military career, um, I just knew that I wanted to do real estate. I didn't know exactly what that meant. So, like many people, the first thing I got into was real estate brokerage. I thought, selling homes, that was, quote, doing real estate. And, quickly I learned that actually I just had a job and it was fun and rewarding in a lot of ways, but it was definitely a job. So then I started flipping houses, flipped a few dozen houses, and again realized I just had a slightly better job. And finally, in 2017, I figured it out. The smoke cleared. I bought my first small multifamily building. The checks started coming in, and I fell in love.
Love it. So I want to touch base on a couple of those points. The first, just so I have the timeline correct, you joined the military in 2008. Is that correct?
That's correct.
Okay. And when did you eventually exit?
I exited in 2012, kind of unexpectedly. So it's a whole nother story for more than a podcast. But
Sure.
the long and the short of it is I didn't have a very good military career. When you go into the military, ultimately what you're doing is you're signing a check to the United States government for an amount up to and equal to your own life. And it doesn't really matter what you want. It doesn't matter what's best for you. It's decisions are made to keep the big, ugly machine working and ultimately to keep our country safe. So, um, there was a lot of poignant moments, great friendships, and I learned a hell of a lot. But as far as having a successful career, it was not.
Yeah.
Sometimes, despite how badly you want something in life, it's just not meant for you. And that took me a long time to unpack after the fact. But yeah, it led me to where I am today. So, I'm grateful.
Yeah. And so, what was it that caused you to decide, hey, I'm going to buy this four-bedroom house and I'm going to rent it out? And had you had any exposure to real estate and the concept of, buying this single-family home, renting out the bedrooms, this quote-unquote house hacking strategy as we know it today?
None. I just knew that I wanted a house with like all the bells and whistles. So to get a house that had, like a jacuzzi tub in the master and the tile shower and, like a huge walk-in closet, it had to be a little bit of a bigger and nicer house. So that came with a couple more bedrooms. And I was sharing a 3-bedroom apartment with a couple buddies from the team. And there was one other guy who needed a place to stay. So I made my criteria 4 bedrooms so I could accommodate my friends. Like I wish that I could say I was smart and I had this all grand planned. And no, I didn't. I wanted to look out for my buddies. We wanted to party and hang out and have a good time. And it just ended up making me like a lot of money over the years. So
Yeah,
yeah, it
love it.
was pretty great mistake.
That's great. So you decided, hey, I like this real estate thing. This is working out fairly well. You leave the military, so you say, all right, I'm going to go get my real estate license. It seems like a reasonable transition. You realize then that you wanted to get on to the investing side, and so you start flipping houses, realizing you're just creating another job for you. And then in 2017, you bought that first small multi. Maybe just describe that really briefly for us. What was that experience like?
So I went to look at it as a real estate agent with one of my friends, a contractor buddy of mine, and I thought that it would be a perfect property for him to buy for 900,000, and I would take my 3% commission and be really happy about it. He didn't like it, and after some back and forth with the other agent said, "Well, the seller's open to owner financing. Do you know anyone that would buy it under those terms?" I said, "Well, would he sell it to me?" He said, "I don't know why not. If you bring $100,000, let's rock and roll." So we did, and I learned a ton from that first property, and grew that into a little over 500 units over the last handful of years, and that brings us to today. One thing I do want to mention about the real estate brokerage and even the flipping. So a lot of people will discount those as, oh, you shouldn't do those. You should go right to multifamily. You should go right to shopping centers. You should go right to blah, blah, blah. I needed to learn, and it was a great proving ground. As a lead sponsor, I think being a master of valuation is perhaps, it's in your top 3 most important skills that are going to make you or break you. and doing all those brokerage transactions and flipping and seeing something that was totally in disrepair, or we could add a bedroom or reconfigure or add value. The before and after, it was critical in my you know understanding of values as I moved into the commercial multifamily space. So, would I have liked that journey to be a little bit shorter and started buying in like 2012 or 13? I'd be done by now, right? But again, just very grateful for that experience and that opportunity, because it's led me to where I am today, which is a pretty good place.
Yeah, love that, and thanks for bringing that up. I think it is important. A lot of people get stuck on the idea of going straight into multifamily, but maybe they aren't ready to go into large commercial multifamily. And starting where they are and where they feel comfortable is probably the best place, just because they can start taking action today and get involved. So thanks for bringing that up. So let's talk about what your business looks like today. If you can, just describe your business and how it's structured and what you're focused on.
Awesome. Yeah. So in 19, I was 2019. I had this kind of epiphany that I was doing larger deals with rich guys, but what about my military brothers and sisters? What about them? Because 506C, they're excluded. They're not accredited. 506B, I can take a couple, but are they going to have the 25, 50, 100,000? That would be the minimum. And again, the answer a lot of times is no. And I just sort of put it in the back of my head that I want to figure this out. I want to solve this problem. So in 2020, I founded Mission First Capital. And as far as I know, we're the first real estate backed fund specifically for military members and veterans. So we've got a Regulation A plus fund. And what that enables us to do is to advertise, openly about what we're doing, and to accept in very small investment amounts. So our minimum is 5,000, to include a lot of these people that previously would have been excluded. So I set it up for my military brothers and sisters, but anyone can invest. The limitation there under Regulation A plus is it just can't be more than 10% of your net worth or your annual income. So so I'm working on that. And then we also have a Regulation D 506C for the rich guys. So we can kind of tag team acquisitions, and we work exclusively with veteran and military sponsors. So, I'll still sponsor some deals here and there, but I understand that in my little corner of the world, coastal Virginia, I'm limited. There's other markets that have more movement, better economic drivers. So I want to partner with best in class, military members who have done some deals in that market. They've got their teams solidified and all that. So we come in with the capital. We'll do the senior debt origination for them. We'll help with high level asset and construction management, and enable them to grow their business faster than they would have done otherwise.
Got it. Yeah, thanks for that explanation. I want to dive into sort of the structure a little bit in case there's listeners out there that would like to explore something similar to what you've done. So, typically in our space, in the syndication space, we often have things structured as a 506B or a 506C. You've gone with this Regulation A plus fund. You mentioned some criteria to it, such as a 5K minimum, can't be more than 10% of your net worth as far as the investor is concerned. But maybe talk to us a little bit about setting that up. Number one, I was going to ask the question, why did you decide to go this route? I'm assuming it's because, like you mentioned, many of your veterans may not be in a position to be able to put $50,000, $25,000, $75,000, $100,000 down on their investment, but they can start with $5,000. So I'm assuming that's the reason why you did it, as you explained. From a very tactical perspective, what was it like setting that up? And what were some of the challenges and maybe some advice you would give to someone who's looking to go down a similar path?
I wouldn't wish it on my worst enemy. And you think I'm being funny, but I'm really not. It's terrible.
I've heard it is, and so I'd like to hear a little bit about, what makes it so arduous.
Having great vendors is important. So to start off, our securities attorney just wasn't the most available. And so I think that added to a lot of timeline. So if you're gonna, you know, uh, you're gonna go down this road, got to make sure that you really shop your attorneys well, your accountants, your auditors, your marketing team. It's just there's a lot of moving pieces, and the failure of one can, um, have the whole machine come to a grinding halt. It's very expensive. Instead of a $10,000 or $15,000 offering for a syndication, we're talking hundreds. And when you're getting into the continuing compliance, auditing, marketing, staffing, it turns into a really big number. So
Mm.
unless you've got a handful of syndications under your belt, you've got a pretty loyal following of investors, or like a platform. If you're some kind of influencer, something like that, you've got large followings on social media, I would probably advise against it, because
And so,
it'll chew you up.
and with this Regulation A plus fund, this is a true fund, correct? This isn't a one-off. This isn't one-off. So this is an ongoing fund, a blind fund, so to
That's
say,
right.
and you are able to advertise this publicly, correct?
Correct.
All right. And so your focus with this Reg A Plus fund is to attract veterans to a space where they can start investing in. Do you focus? Well, I'll let you explain. What is the focus of that fund?
So as far as asset class, or what's the whole
Yeah.
mission?
What are you
Okay.
investing in? Yeah.
Yeah. So opportunistic value add commercial real estate. So multifamily, that's my bread and butter. But I've got some great friends who are veterans that are killing it, self storage, killing it in hotel conversions, killing it in raw land. So we're opportunistic and open to anything, so long as it's going to meet our in-place cash flow goals. So land is probably a bad example. I don't anticipate us doing a land deal anytime soon. So it's got to have the deal, as you know, this market is tough. We want it to work as is, and then we want to have a clear value add path, right? We're not just pencil whipping a 3 cap at exit and saying this is going to work, and we hope in 5 years we can make everyone whole. So we have certain benchmarks of what we want to see as an in-place cash flow, and then a proven value add strategy through the operator, through other properties in the market, so on and so forth. So we've got sort of the two-pronged approach: cash flow, and then the forcing of appreciation. Who knows whether cap rates will continue to compress? Interest rates are going wild, so forecasting that stuff's a little bit difficult at the moment.
Yeah. And so you started Mission First Capital in 2020. When did you formalize and complete the fund?
That's a great question. I think September, I won't get the day correct, but in September of 21. So it was about a
Okay.
year.
Okay.
It's about a
Great.
year from first engaging counsel, first, starting the process. So yeah, it took a while.
That's great. And so have you, up to this point, been able to acquire any property inside of the fund?
So we haven't yet. We were actually in the process of amending the offering to make it a little sweeter for the investors, which they'll like. So we've had a conversation with our existing investors and said, "Hey, we want to actually make this deal better for you. Pause and stand by for the updated offering."
Mm.
But we're strongly looking at a storage deal right now, a hotel conversion, and a multifamily. And it's just a question of if one of those three will meet our criteria to pull the trigger and then actually fund.
And just from a very practical perspective, when veterans are investing into this type of fund, how does that process work? If you're waiting to find the right property for the fund to invest in, are they depositing a certain percentage to hold their placement in the fund? Are they depositing the full $5,000 minimum investment? How does that work from a very just
So
granular level?
Yeah. So once we were qualified, we started, low level of marketing, and people expressed interest, and we had some people funding. But with everything that's happening with the market, I decided I wanted to amend. So we are now only accepting soft commits
Mm,
for the new terms.
got it. And
Yeah.
what's caused you to want to amend it? I mean, I know you mentioned wanting to make it a little bit sweeter for the investors, but what was missing? Why? What caused the problem? I think there's something for our listeners to learn from your
Yeah.
experience here.
Oh,
So
for
I would love
sure.
to hear about that.
My original structure is a beautiful structure if you can sell it. But if you do something that no one else is really doing, then you're facing a headwind. So originally our offering was that you can invest with us for 3 years and receive a 25% total return upon exit. So 8% a year and change, right? And you could invest with us for 5 years and receive a 50% total return at exit, or 8 years for 100% return. So it was eight and a third, 10%, 12.5%, which they're not terrible for non-accredited, offerings, but people just didn't get it. They're like, okay, well, what's my equity? We're like, well, the way that I've structured it is you get everything until you're paid, right?
Mm,
So we're in alignment, but it just wasn't quite translating
mm,
to people that it's their first investment.
yeah.
And I think there's something psychological about knowing that, in March, end of March, you're going to get a check, even
Mm,
if it's a small one. If you invest $5,000, it's not going to be life changing money, but it's something.
yeah.
So the market sort of feedback that I received and privately was, hey, like I get what you're trying to do, but we want to see it this way.
Mm,
They said, okay, great. So pause. Let's not fund anything right now. Let's get our current investors on board. They are. And, we've got some strong deals we're looking at right now. And as soon as we get the amendment, then we'll be back rolling and look at taking down one or more of these deals.
and so, what did you change about the structure or how you're presenting it? It seems like two pieces here. The first is the actual legal structure of the fund, and then pitching it to potential investors. What's changing about that?
So it's going to be. I'm not going to get into particulars because since we're
Sure.
not qualified
Understood.
for this amendment yet, I don't want to. Yeah, I think I'm probably fine because it is qualified, and I've decided to hit the pause button on it. But just in case, I'm not going to discuss specifics, but we're going to do a split that's more in alignment with what most people are doing. And then instead of a preferred return, which I think some people are going to get into trouble with, depending on which way this economy goes, we're doing an equity hurdle at exit.
Mm,
So
okay.
it's sort of like a reverse pref.
Yeah.
Does that make sense, or
It's
should I
on.
dig into that further
No, that's
for
fine.
folks?
It's
Okay,
the
great.
basically you're giving them a position on the back end versus a pref up front.
That's right. So it'll be some profit split for the operations, and then on the exit, the total return has to equal X before the split would reemerge.
Yeah. Okay. Great. So you've acquired over 500 units up to this point,
Yep.
and I believe, if I remember right, 6 assets total. Does that sound? Am I getting that correct?
I think it's more than that, but
Okay.
it's a lot of my deals were smaller ones.
Got it. Yeah,
I
that's what
started
I
with
wanted to dive into a little bit is just sort of talk about what you've done in the space prior to focusing on setting up the fund.
yeah.
Talk to us a little bit about what the business has looked like over the past handful of years and acquiring, close to or above 500 units at this point.
Yeah, so this is I think going to be valuable for your listenership, other sponsors, right? What I think a lot of people run into is you start doing a deal and you'll do it yourself, right? So that was my first deal. And then you'll say, okay, I need some more money. I've got a few friends with money who understand that this is a good asset class. Let's joint venture. That makes sense. And then you sort of run out of friends that have the appetite to also be active in the management and ownership of things. And then you say, well, I really should syndicate. I should do something bigger. And then you do a few of those. And by the time you've got a couple of syndications going and 3 or 4 JVs going, and then your own portfolio, and there's several different management companies because they're in different geographies, or, one's a 100 unit, one's a 6 unit. They're just not going to be the same manager all the time. It becomes very busy. And even if you have executive assistants and people that are helping you and great attorneys and accountants, it's just a very busy life. And, I think it's hard to scale past that several hundred unit mark, or even maybe it's not a unit count, it's a certain number of projects with all these different partners and actors. So I said, hang on, I want to bring all this down, and I want to build from the ground up a company that's strong enough, robust enough, not to do 500 units, but to do 5,000 or 50,000, and so that was part of the calculus in making that decision.
And so prior to, let's call it the 500 roughly units that you've done, maybe just describe those deals for us, at a high level,
Sure.
the deals that you've done and what you've focused on in the past.
Yeah. So the first deal I did was a 13 unit, and I cut my teeth there. I learned a lot. The next deal I did was like way too big. And for my experience, you mentioned everyone should start within their comfort level. I'd be inclined to agree with you, but take it just a couple notches outside and see what's possible. So I didn't have any ability to do a 108 unit apartment building. But when I got into negotiations with the broker, and as I mentioned, I really understood my valuation. I knew I had something. I was convinced, right? So I started shopping it around, and I found the top real estate agent in the state who owned a property management company, a retired commercial real estate broker who was looking to, GP, but like kind of passively invest in some things just to keep him busy, and then a Class A general contractor. So the four of us took down that 108 unit together as a JV. And that's the deal that really proved to me what was possible in this business. So then I did an 82, a 20, a 20, a 30, 104, a 92, 32, or something like that. And, I've been selling some stuff off, and, devoting all of my energy currently to mission versus capital, with the exception of the couple of partnerships that I have remaining.
Yeah. Love that. And thanks for giving us an overview. So I think there may be some insight that you can share with our listeners as it relates to small multifamily projects. I mean, it sounds like, you're in that space of 20 to, slightly over 100 units. And there's some distinct advantages to playing in that space. And there's also some challenges that you'll face. Maybe shed some light for our listeners on your experience investing in multiple deals in that what we would call small scale commercial multifamily.
Yeah, I think it's an amazing place to start. I really do. So the investment thesis that I came up with, based on that 108 unit, is actually a split site portfolio. So it was, I think, 6 small buildings within that portfolio. Is that I wanted to play in a space that was a little bit too big for a dentist or a lawyer, and too small for the iBuyers. And where I perceived that to be in my market was about 1.5, 2 million to about 5 million. And so that's where I hunted. And hunting was good, business was good, right? The downside, as you alluded to, is management challenges, right? If you don't always have somebody on site, you're managing a portfolio, it's just a little bit more of a drain, a little bit more labor intensive, and you have a little bit less oversight. And a great friend of mine, Andrew Cushman, he said, look, on a spreadsheet and on a basis buy perspective, these deals look phenomenal. You're buying them at a great cap rate, you're adding the value. But when you go to sell, who are you selling to? Other guys like you who are trying to make a name for themselves. So the cap rates are going to be a little bit blown out from, your 100 units plus. So the advantages are, access, mom and pop owners, the ability to add a lot of value, the ability to have good in-place cash flow. The negatives are, complications with management and oversight. And then also when you exit, you're selling to the same kind of buyer. The you of 5 years ago, 10 years ago, whatever the case may be.
Yeah, love it. Great explanation. And I'm curious, as it relates to, just to give us some context, what market were you investing in this type of product or
So I'm
markets?
hyper focused in coastal Virginia. So it's Virginia
Okay.
Beach, Norfolk, Chesapeake, all the way up to Richmond. I did a couple deals up there, which is Richmond's actually a pretty booming market. I wish I had bought more there, frankly, a handful of years ago. But yeah, I really like the Hampton Roads area, as it's called, in those cities. A lot of military, a lot of defense. We have a beach. It's not going anywhere, so it's not as sexy as some markets, but it's sort of a nice blend between cash flow and appreciation. And the word's out because when I started in 2017, no one was here, and now everybody's here.
Got it.
So
So what could we take away from your experience then, investing in small scale commercial in the market that you were in? You already alluded to some of the pros and the cons of investing in that space. But let me ask you this. What would you do different and what would you keep the same about your past experience investing in that type of product?
oh geez, what would I do different? I don't think too much because you don't know what you don't know. And you need the 13 unit to prove that the 100 units possible. And then when you're doing the 100 unit, you know that you can do more 100 units. And you know that you can sort of systematize and lean out some of your management practices, figure out where you can charge additional fees for different things. And it's just in the military, we like to call it the 3 meter target. So at the shooting range, that would be like it's right there in your face. You're using a pistol and you're just familiarizing. So keep your eye on the 3 meter target,
Mm,
execute it, and then you'll see the next 3 meter target. Like in training in California, you don't know how you're going to make it through a 6 or 9 month training program where you're just getting beat on every freaking day. You're running 6 to 8 miles a day, doing all sorts of awful things, 2 mile ocean swims at night and whatever. So, it was suggested to me that the goal should just be to make it to the next meal.
mm.
And if you can make it to the next meal a few hundred times, then, you know, and you survive, you will have achieved your goal. And, so it's hard for me to look back and say, like, I should have zagged, but I zigged instead, because it's all gotten me to today. And, I've made mistakes in life. I made mistakes in real estate. In my flipping days, I had a few that lost money and it was tough to pay those back. But, you have to do it. You have to do the right thing. You have to learn and just move on. But for the purpose of your audience as fellow lead sponsors, particularly in the small multifamily, I'll hit it again. I think being an absolute master of valuation in your little corner of the world is key. You can look at 100 deals, but if you don't know what constitutes a deal, you have nothing. And a byproduct of looking at 100 deals is you start to see patterns emerge, and you'll notice when there's an outlier. Hey, I want to dig in. I want to figure something out. The other thing is, your network is your brokers, your wholesalers, your real estate agents, your residential real estate agents. A lot of the smaller stuff was purchased from residential real estate agents, and those are my favorite because they don't know what they're doing half the time. So you go in, and if you're more certain and you've got data, and you are sort of putting them under your wing and saying, "Hey, this is how it's going to go. We're going to figure this out," and negotiate some great seller financing deals, some great basis deals from brokers that didn't understand the valuations in the asset class that they were listing, which is pretty cool. And lastly is your team. If you're going to be in the small multifamily space, you've got to have your property management sorted. You got to be able to rely on them. Don't nickel and dime them. Pay them well. It's a very hard job. Same thing with your contractors. And if you can arrange that team and you can arrange your capital, you can keep growing in that space.
Hmm.
Um,
Yeah.
Yeah,
Great advice. Love it.
thanks.
Well, I appreciate you, sharing your journey with us and giving us some insight into how you've structured the business, some of the challenges in setting up a Reg A fund, and talking to us a little bit about your journey in the small commercial multifamily space. I want to start winding down here. I've got a few final questions for you. The first is, what do you see on the horizon for your company over the next 2, 3, 4 years?
Yeah, so getting the Reg A amended and really doing a large marketing and educational push, because ultimately my goal is to turn a light bulb on for military members and veterans who maybe have never invested in themselves before. They've never invested in anything outside the stock market, maybe not even in that. So by putting out engaging content and showing how we do things and highlighting the other veteran operators, it sort of lays the groundwork and the path of how someone can do that themselves. And if it's not in the cards for them, they can come alongside us and participate in the deals that we're doing. It's 100% veteran owned and operated, and we think that's pretty cool. So in the next handful of years, obviously doing the first few deals is important, and then just spreading the word, spreading the gospel, and trying to get as many of these folks engaged and investing in themselves as we can.
Yeah, love that. What's the biggest challenge that you're facing right now in your business that we could all learn from?
Well, I think it's just trying to read the crystal ball. You know, nobody knows what's happening next year, next cycle. And that's a little bit stressful when you're taking people's money. So it's caused me to be a bit more conservative than I was in the last few years, because things we now sort of see the cliff, right? And whether it's actually a cliff or whether we're going to keep going up the mountain a while longer, nobody really knows. So I'd say that's a pretty big challenge. There's some people that are still very, very bullish right now. I'm just not one of them. So I'm, being a lot more discerning. So I guess that the true challenge would be deal sourcing.
Mm,
There's a lot of capital out there. Um, it's the deals that we really want to be careful about, I think.
yeah. What's something that you're doing really well in your business or that's going really well in your business right now that we could learn from?
Well, right now I'm selling a lot. So if you bought things in the last decade, I think taking some chips off the table is probably a decent idea.
Yeah, love it.
Cash is king no matter what comes. So
Well, Phil, this has been a great conversation. I appreciate you coming on and sharing your experience with us, giving us some insight into Reg A funds, your business in acquiring small commercial multifamily and some of the challenges and opportunities in that space, and your vision for your company moving forward. I think what you're doing is incredible, and it sounds like you're working through all the challenges and the hurdles that you have to get through to really build something incredible, and I wish you the best on that journey. Thank you for coming on the show and chatting with us, and I look forward to connecting with you again soon.
yes, sir. Thank you.
Hey, before we let you go, I actually almost cut you off before we give you a chance to share how our listeners can connect with you and learn more about what you have going on.
Awesome. So missionfirstcapital.com is the best source of everything Mission First Capital at the moment. We've got our social channels up as well. I'm on Facebook as Phil Capron. Follow me there, see a little bit more stuff, but missionfirstcapital.com is the main source.
Awesome. Thanks, Phil. Appreciate you coming
Cool.
on. Talk to you soon.
Have a great one.
Bye
Bye.
bye.